So this is Wednesday. It's 10:24 a.m. March the 22nd, 2017. My name is Dale Elliott. You're in the Echo Traders trading room. We're looking for a counter trend coming up in here to 10:30 area. A counter trend to the upside. I'm going to squish the chart left to right. Huge sell-off yesterday. And right down into our 685 here this morning. We're looking at that as an exhaustive area, at least temporarily, and we're like to see a counter trend to the upside. We talk about getting in the pecking order at the money off target. So we're targeting the 161.8%. That is 48.23 and beyond. But we'll target that. We know that the market is going to have a little bit of trouble here. We recommend putting some of the profits in your pocket at 47.80. If it doesn't go, no harm done. Okay, so ecotraders.com. Have this here for you to read. You can come back and read it later. We're going to come back and keep you informed. When we get just a little bit handier, 10:30, we're expecting a pretty exciting morning. Let's see what we get. Okay, we're getting pretty handy 10:30. We put an additional time clock on it. It's called a floating time clock. Has the date, the time, just as a nice reminder. It is now 10:29, 45. There you go. And we're going to zoom in on this here just a little bit. What we're looking for is our counter trend trade to the upside. And market coming in, your fill area is 23.6. See if that'll hold. Okay, about half a minute into the 10:30 inventory news event. See if we can get that push to the upside. Not getting it yet. Kind of thought we'd have a bigger correction. That's what we view the inventories are, or as are, as a correction to the market sell-off. So we're looking at the possibility of a continuation to the downside, but we wanted to see our counter trend from 10:30 on. That's retesting the low of the day, 47.42, a little bit beyond that. So the volume to the downside. Obviously, more volume, lots of volume, more volume to the downside produces a red candle. You can use that as your volume stick. Okay, new candle coming in right up, right about where we wanted to. Positive to the downside. We're looking for a upper move counter trend here. Not working out so well. That's a stop killer. You're looking for this, your market to retest the zero here. This is a Sierra chart platform. Pecking order target for an exit strategy is 48.23. This is a better place to hit it from. We'll come back and keep you posted. We're looking for a retest 47.42 and beyond. So crude is retesting the 47.42 as I can't say suggested, but preferred to see. Okay. Crude, we're looking for a pullback right to that zero area once again. All right, so that's a positive sign, a nice flat bottom green candle coming in there. We'll see if it can continue to take out the highs. The next high to take out 47.70. We'll see if that's in the cards for that upward move counter trend area here. Okay, so nice pullback so far, so good. And this here is a double top area here that we had in line earlier. We're just going to extend that over. That is resistance. Market likes to challenge resistance as well as support. MACD is turned to the downside here. Let's go find a pen. This here darn pen this morning is slightly in green, so a little turn of events on the MACD to the downside. We were looking for a push to the upside here, and here, and here. So pecking order target, very important. We had a counter trend target earlier to the 76.4, and it was just a tick shy of that, so you can keep your target in place for exit part of your position. We also have a exit here at 48.06 area. This is also, and you want to be in the pecking order for 48.23. See if we get it. We'll come back shortly, and I'll change the pen color. I'm not really looking so much at that that green. All right. So CL not making it to pecking order counter trend targets here. As we had explained here, that trend line held right here at 47.70. Allowing participants of the entry at 47.54 to take a little tiny bit of profits. If you entered at zero, you're still holding, and you have the pecking order for exit. And if you entered below here, well, what can I say? Manage your trade. Okay, so here's crude. Once again, the exhaustion to the downside, that's fine. And the money off that we talked about, let me see if I can slide that over. So that's money for part position off if you still have some position on. If your stops were taken out, that's unfortunate. But there's your first position money off counter trend. Okay, the move to the upside. So we now have a alignment of your MACD and the histogram moving above zero. Let me put the zero line back on here. All right, so we put the zero line on the MACD in white. It'll get gobbled up. It'll become black after a bit. We don't worry about that right now. So move here, counter trend. Target, so your next target is your 100 area here. So if you're targeting the 100, we had mentioned that would be a target area earlier in the trading room, and the next money off is your 127 up here. But we don't want to get too far ahead of ourselves. We talked about the pecking order target, so hopefully you still have some of that by the time the market gets to the pecking order. Hopefully you have some position left that you haven't gobbled it all up. Okay, all right, so we'll come back and keep you posted. Money off target 47.80 achieved. Okay, so off of the zero, those of you that entered at 47.42, job well done. You took a little bit of offside. Let me grab the crosshairs here. A little bit offside, 33, about 9, 10, 10 ticks, so about $100 offside from entry at zero. And we talked about the zero earlier, so that's not a bad place to be wrong. And that retest of zero we had talked about from the exhaustion to the downside. Let's put a little X on the exhaustion to the downside, or a big X, it doesn't matter. Exhaustion down here, reset the chart. And counter trend, it's a counter trend trade. Yesterday, big sell-off here. We're just looking for a decent counter trend trade. You want to know more, contact support at ecotraders.com. So here we are. It is 11:45 here, almost within a minute of 11:45. And what we were looking for here, let me grab a pen real quick. I should have had that in hand here. We had mentioned your money off. There's your target. There's your money off. Money off, we had mentioned a pullback to about the 38.2. There's your 38.2. We had mentioned from that 38.2 we would aim for beyond the 100. It has reached the 100. Cool. So this year is looking better as we go. So your next money off, 48.06. Let's see if we can get there. What we're really targeting from that 38 is the 141 right up in here. It's a little tiny bit hard to see, especially since I wrote all over it. Okay, so that's why we say money off here. Okay, in case we can't get much farther. And then you also have your pecking order target beyond that. One thing at a time. Okay, let me erase all this here, clean up that chart. So take your screenshot if you're doing so. So this is exhaustion to the downside here, and exhaustion to the downside. Do you want to trade short? No, no, no. All right, no, no, no. At exhaustion, you want to trade the opposite direction. So very good. Offside, deeper than you want, and we know that we don't trade that first candle anyways. Okay, trade the aftermath, get your fills. That's okay. All right. Often we're in too much of a hurry to enter a trade, and the offside can be enormous. So exhaustion. And then our counter trend still in play, so we'll see how far what we can squeeze out of a counter trend trade here today. The inventory day is a correction. That's what I like to call it. I don't care what the numbers are. I don't care what they do, as long as we can trade some sort of aftermath benefit of it or during that. But your stops, you'll have your stop entries in momentum will give you either slippage in your favor or not in your favor, just depending on how you do it. But entries have to be before to get that slippage effect. So talk more about that in another video. But for the time being, counter trend looking looking up here. Okay, here we go. It is now 10 after 1 p.m. Um, what we have here, what we have is the market coming up to our 100 area here and fell back into a support area. We call this here the 23.6. 23.6 held as a support area and cashing in to the upside. So respectively, this here would have taken out your stop. You take your money off here, put it back on here, easier said than done, and aim for the upside targets. You still have the same targets. You're still in the same pecking order. That's the same trade. Okay. It's an echo trade. Echo traders trade that we look for each and every day, or echo trades. That's where the name comes from. Okay, here we go. Here we go. This is looking a-okay. I want to get rid of that scribble here for us. And test 1, 2, 3. Sometimes forget to turn the microphone on. Just double check that. So what we have here is we still have our same pecking order targets, and this is why you keep the pecking order. So if the market just barely touches that target, you get filled, where other people prior to would be in and out of there. So you, as people shed that exit strategy, you advance in the pecking order. Okay, so we're going to scrunch high to low here and bring that target back in view here. So this is the main reason why it's called the pecking order. So this here just promotes good trading habits of having a target and having an exit strategy, looking at a better place for an entry. For example, the 0 was a better place for an entry than our normal 23.6, especially when it went offside. We didn't change the fibs because we don't have to change the pecking order, and we don't have to change down to the black, or the blue X, I'm sorry, the blue X. Okay, you can almost wipe off everything below the 0 as if it didn't even exist. Think about it that way. So just a few ticks away here, about $70 from the exit of your order, and pretty darn close. So we'll come back when that target is reached. Little fella singing away there.